and tools later on. We will be sharing it in our YouTube channel. So if you ever want to come back and see something that was shared or a link or a reference, you can go back to it. Thank you all for joining today from all sides of the world, all countries. I know for some it's the end of the day, for others we're starting. So we wanted to do this meeting in a very informal, casual, but resourceful conversation where we'll be discussing how the world is changing and how impact investment may change with it, and how startups from all over the world can actually take advantage somehow or adapt to the current situation, and what we foresee that can be the next year or decades for impact ecosystem and for investment. So I will have here with me today very special guest speakers, Felix, Wong, Joshan, and Lwazi, who I will introduce just shortly. And I want to thank you all for accepting this challenge. And before we start, while everyone is still connecting, I will just give some guidelines on how we can conduct this meeting for it to be more fruitful for everyone. As I mentioned, we are recording. We want this to be an interactive meeting. This is why we chose this tool that allows also more people to join and to share and to see each other. But for that, I need your collaboration. I will really need for you to have your microphone silent, just because sometimes there's noise or some interference. And whenever there's questions or comments, for now we can use the chat. There's my colleague Afia from Rich Billions also joining here, and who will be helping with your questions and with the Q&A session later on. And after we can also introduce you and your questions when it's the moment for it. There's a trick you can use in Google Hangouts. You can see below where you can mute your camera and your microphone if you want. There are 3 dots, and in those little 3 dots you can change the layout, so you can see either the person who's speaking, or you can choose to see many people at a time. It's up to you, but this may help your experience during the meeting. And yeah, I just really invite you to collaborate and to share your messages and your questions. We want this meeting to be about what you want to know and to learn with each other, as Lwazi was saying just a while ago. So do share your questions so we can direct the meeting into that line. And that's all for the initial talking. So I would really like to start for now, and maybe I will start by introducing my guests today. On one side we have Felix, Wong, and Joshan, both representing AngelHub and Hong Kong startups community. Jo is a professional investors relations practitioner. She's relations director at AngelHub. She has exposure in the investment ecosystem and the equity crowdfunding scene in Asia. She's very experienced in the corporate sector and international fintech. I heard that she's particularly passionate about sustainable investment and social entrepreneurship. We want to hear all about it in a bit. And of course, she's building along with Felix also the startup investment community in Asia. So thank you so much for joining, and welcome, Jo. And and Felix, also working side by side with Jo. I'd say yes. Felix is a serial entrepreneur himself. He co-founded ventures, he led other ventures working in the past years. Cloudbreak, for example, is an Asian leading marketing platform for influencers, and other ventures like The Wave and Nabitu. We want to hear this very insightful perspective about who's leading and scaling up startups. He managed communities such as Techstars and Techstar programs. He's the head of growth for both AngelHub and Hong Kong startups community. He was also a great instigator for this meeting, so I thank you for that. And both these organizations that they're both related to, they are building this ecosystem for like-minded startups in Hong Kong and in Asia, and also involved in other territories. So thank you very much, Felix, for joining us today. And last but certainly not least, we have Wali.
Thank you.
Head of Ventures for Founders Factor Africa. She's truly an entrepreneur, very inspiring. Her work is impressive, also as an activist for inclusive finance and for women and girls. She's also Obama Foundation Africa Leader Fellow, amongst other recognitions. She's passionate about leveraging the power of innovative finance and disruptive tech in entrepreneurship and working to democratize access to capital and knowledge and markets to Pan-Africa women of color. Thank you so much, Lwazi, for joining us today.
Great, thank you for having me. I'm really excited to be here.
Thank you, thank you. So I would start. Enough of me, but maybe for those who just joined, I can just present myself again. I'm Alex. I'm here representing Bridge for Billions. For those who may not know Bridge for Billions so well, Bridge for Billions is an ecosystem of entrepreneurial programs for early stage founders. So we support seed stage founders in developing their business, giving structure to their business, and connecting them to other growth opportunities. And we also partner with partners like the ones we have today and others to make sure that we have the right programming formulas to support entrepreneurs and democratize access to quality education in entrepreneurial and bridging those gaps that we have in our big ecosystem. And I would like to ask you to do the same. And if you could briefly, each of you, introduce your organization and how you work with both founders and investment opportunities in the work that you do. Maybe Lwazi, can we start with you?
Sure, it's happy to go. Great, so again, thanks for having me. Really excited to be here. As shared, so my name is Wali. I'm sort of wearing two hats today. I think my first one is as head of venture sourcing at Founders Factory Africa. And then the other is as South Africa chapter lead for IX Global, which is a leading impact investment and innovative finance organization out of Singapore, but with over 46 country in terms of footprint. In terms of who we are, so Founders Factory Founders Factory Africa actually is a corporate-backed sort of venture development company headquartered in Johannesburg, with Pan-African facing. We're part of a larger sort of network of Founders Factory companies, founded in London, been really successful over the last 4 years, built north of 140 startups and raised north of 140 million pounds in investment to date. We recently launched Paris and New York, and really excited to be a part of a global team. We're on a very bold mission to build and scale about 140 tech startups on the continent over the next 5 years. And so we are a team of Africans, we're a team of founders, we're really bullish about the continent and really excited about the work we do. We really focus on helping businesses scale and grow, and we do that in two ways. So we have two parts to the model. The first is we have a venture build side, and that's all about, literally building startups from scratch, conceptualizing, validating, and sourcing a founding team, and then spinning them out over a 12 to 18-month period. And then the other side, which is the side that I sit on, is on venture sourcing, is our venture scale program. And that's where we target really ambitious sort of seed to pre-series A tech startups and really focus on helping them grow and scale at an accelerated level. And so we have both a services and cash component to how we invest. And really that's driven by the insight that we recognize that capital is an important catalyst to growth, but it's not the only important catalyst to growth. And so we blend our investment thesis around cash and really a strong team of experts and builders who co-build with the founders that we bring into the program. So we have a makers lab where we have support across engineering, data science, investments, basically most of the resources startups need but typically can't afford. And then the work that I do as part of IX Global as well is, founded and leading the chapter in South Africa. Really passionate about the work they do. As some may know, they're leaders in sort of the impact investing and innovative finance space. Started in Singapore over about a decade ago now. Have a presence over 46 countries, over almost 80 million people impacted, and most notably known for their award-winning Women's Livelihood Impact Bond, which was the first of its kind to sort of be listed on the Singapore Stock Exchange. So really excited to sort of be blending the perspective of sort of commercial tech and impact and innovative finance in this call. Excited to be here.
Thank you so much for sharing. Thank you, Lwazi. That's very exciting. I'm sure we will explore a lot of the things you just said in the next questions and comments. Joe, would you like to go next?
Sure. Scared because we will split into two from Felix, between myself. So we are myself and also Felix are coming from AngelHub as well as WHub. AngelHub is actually the first and currently still the only one that is Hong Kong SFC security licensed firm for equity crowdfunding platform in Hong Kong. So we help startup that are scaling in Asia mostly. Up to today, we have 3 portfolio companies from younger stage, like Know Your Customer, also from some of the later stage, like Pomelo, which is an e-commerce fashion as well. So that's one of the part that our venture arms of what the work we do. And we also is a sister company of WHub, which has been supporting and fostering like Hong Kong tech innovation systems since 2014, with all mainly of the service like showcasing and like some of the event that we talked to you about, like Startup Impact Summit that we do. And we also like are supporting the ecosystem by writing some of the white paper. One of them that we are also updating nowadays on the impact session as well. I would say that is more on in general, helping the startup from grow from their venture by giving them like the venture arms and also like for the whole ecosystem building. But I will let Felix to talk more about it.
Thank you, Joe. Felix?
Great, thanks, Joe. So to build on top, I support Joe and the team to find the most promising seed to Series A companies across Asia and Europe. And I think this is also part of the conversation today about alternative investments. I think definitely we can highlight that later on, the difference between angel investments, VC, CVC, alongside equity crowd-based fundings, reward and equity-based. Right now, we are scaling our organization by working with companies such as accelerators, incubators, and also institutional investors to find the most promising portfolio companies, as well as maintain our relationship with accredited investors across the world. And previously, I spent 3 years with Techstars, running the Asia Pacific initiatives, also working with corporates to persuade innovations between startups and companies. And I have also backgrounds in data science and growth marketing. I think among the panelists today, I have the less experience in impact investment and social entrepreneurships. But alongside my career in startup ecosystem, I got to meet a lot of really amazing social entrepreneurs. I work with impact organizations such as Pitch for Village, which I also signed up as a mentors earlier. I learn a lot from founders as well. So I think today I can definitely contribute to the discussions around this book. Good.
Thank you, all of you. And we will go to that point, Felix, a little later on about different mechanisms and investment profiles that startups can reach to, or that are now being also built, because there's also new things coming out every day. But Joe, maybe I'll just ask you, because you deal with investors daily, and with startups and with those decisions. And before we enter in the current context and how this is affecting the panorama, or what are we seeing about it, can you maybe just help us understand, for those that might not be so familiar with it, the different approach that might be between an impact investment process and the mainstream investor, the indicators and the profile of the investment mechanisms that startups have in these two different scopes of the panorama.
Okay. Let me put it into this way. So for us, we AngelHub, or the investor we work with, we were pretty agnostic, no matter on startup as well as on investor as well. But we definitely have some of the investor focus on impact. But rather than put it into comparison first, like I give you a general idea of like the different background of the investor that we are working off, like family office, some of them how to relocate we allocate their money into like some of the impact startup or even into different startup. The differences, it would mostly, I would say that for impact startup, they could go on some of the criteria, but it's really about their mandate. It doesn't mean that like some of them we think that can be merged. Like say for the impact focused one, I'm looking for like those that who is SDG goal related, targeting into those. But definitely some of them say, I give you an example, like say of the one fintech company, they are also microfinancing. They help people to do the payment for daily into like for the farming, for the farmer, or even for like domestic worker. So it can be like they can cross over for the investor background. And in terms of the investor, what they are really looking at, number one, when we talk about impact investing, is definitely it can be donation based. We would say we are looking for in terms of some of the return and potentially profit, but some of the things that they are together also doing is like no matter for the investor in focus on impact or not, they want the startup to be the growth, as well as like how they can help them to go to the next stage. I would say that. So in summary, it's more onto I seeing that they kind of like overlapping at the moment. It doesn't really like a too diverse too diverse direction, but more onto nowadays the direction is moving forward. And of course, like what you said onto going upward for the COVID-19, some of the perspective can definitely change, that we can also discuss more later.
So thank you. Investing in innovation that matters, as you usually read, right? So a startup that is tackling a meaningful problem, but that can generate a return for this investor. And then, of course, we have different sizes and profiles. I was reading from the Global Investment Network, Gene, the CEO issued a comment saying a response and his perspective on what's happening. And of course, he divided the response into 3 stages, or 3 development stages. There's investment for immediate response, so a behavior that goes immediately for priority and aid needs and motivations. There's then investors already looking for recovery engine, solutions to make the system go back to working and to be productive. And then other ones that he called resilience in solutions for, I would say, promoting a systemic change after all this that happened. Do you see, Joe, to complement on what you were saying just now, different behaviors and motivations from the investors that you were working for within the next month, the last month?
No, definitely. Maybe I break it into 3 of the key things, key findings, or key things that we see as well. Like for investor, definitely, because nowadays everyone is being impacted, no matter business or investor, right? So we do see that more communication is coming out, like between the investor as well as the startup. Like we often see and we often encourage investor to have like more frequent and honest communication, so that they can provide some of the resilience, some of the things that tell the startup that you can focus on your end goal and like take some of the pressure off from like meeting short-term goal, but don't overpromising. Be open, and also would be like doing it regularly and transparent on the both side. This is one of the things that we definitely seeing more. And the second thing that we also see that how they are reacting, no matter on the investor, and how they should also encourage the startup to do so. Like is that make sure your portfolio companies are taking effective health and safety measurement on their leaderships, staff, and even customer. Very easy question that you can just ask: do you provide your employee like some of the paid sick leave, or what kind of like measurement that you're doing in the workplace that could tell outside that safety comes first. And then next would be more onto the complex question that, so how can we manage how can we manage or avoid some of the masks laid out, or what are the ways that we can be flexible with our capital to help our portfolio companies to put people first, I would say. And more onto that, I would say that more would be like the next thing would be more onto impact management advice and even support, because with the way that people's lifestyle changing as well, we could be looking into how to examine like their social and environmental goals, as well as some of the key KPI, what we say, key performance indicator. Again, it's go back to like how the two investor and the startup can be learning this together during the long way.
That's very good advice, and I think that one of the key points of the investment relation is exactly what can both parties bring to each other, and not only a money transfer or a cash transfer or a sustainability transfer, but if not, mentoring, advisoring, and grow together. And this mission and vision alignment. Thank you, Joe. Lwazi, I would love to hear your insights on this. And also, I will just ask you to, because there's something that we can argue, which is the pressing matters that already existed before. They're no different from the ones that exist now. And if anything, they're more exposed, right? So I would love to hear your perspective and what's happening in your community, and who are the startups being able to deal with this, to showcase what they can do for change and to gain visibility and attraction from investors or other key stakeholders that are actually leading in this innovation that can arise from what we're living.
Yeah. I think that's a really interesting question and point. I think to sort of address your first question, so around in terms of what we're seeing from an investment point of view, I think where we sit, just being on the continent, whether you're a venture capital or a traditional investor or an impact investor, it's really hard to actually invest on the continent in a startup and not actually impact, right? And so I think for us, we are seeing, a rise in sort of these blended financing structures, which I think makes sense, right? Because at the end of the day, whether it's Founders Factory or IX or, any other investment house, I think for us, we focus on three key things. For example, in picking a startup, we focus on the quality of the founding team. We need to make sure that they have domain expertise, but because it's a startup, we know it's going to pivot over time. And consequently, you need a team that's flexible enough to weather those changes. And I think that touches on to some of the sustainability around whether they survive COVID or not. I think the second one is, similar to any other investor, we interrogate the quality of the problem you're solving for, right? Is it a good enough problem to solve? Is it a lucrative problem to solve? Is it a sustainable problem to solve, right? And I think that becomes a really core issue, and I think a focus point for us. And I think the third is also, market and scalability. Is there a market need for what you're offering, and does it offer impact? And for us, we measure impact across, various metrics outside of sort of social return, jobs created. The fact that you are financing a startup for some in Africa especially means, somebody now has a means of income to sustain themselves and their families. And so we look at impact across a very wide spectrum, but also with the view that for us, we don't believe, impact and returns should necessarily be mutually exclusive, right? And I think doing good business is doing good business, whether that's women, whether that's entrepreneurs in Asia, Africa, anywhere. A strong founder with a strong idea, I think, deserves an ecosystem that backs them. And so we try to play a role in catalyzing and intervening in that way. I think to address your second question around sort of the trends and changes we're seeing, I'd say there's three key things. I think there's a lot going on, as we shared prior to this call. It is an unprecedented time, I think, in COVID, where when you compare it, a lot of people like to compare it to like a 2008 crash or any other event where, in my opinion, was a lot more contained, right? Whereas what we're dealing with now has so many domino effects, but also so many, Venn diagrams in terms of how it just catalyzes impact across a variety of sectors outside of finance, health, etc. And so I think that three things that I think we've seen come, I think, from an investment point of view, we've seen a notable market change around this shift from sort of a founder-led investment market to sort of an investor-led market. And so I think if you talk to a lot of investors, we've come out of this period where there was a lot of money in the system, there's a lot of money in the market, and almost to some extent, you were seeing, overstated valuations. And you were seeing, founders sort of set prices quite, confidently, just because they had so many options in terms of opportunities to raise capital. And so we're seeing a shift as a function of this, of seeing investors start to, take the lead on that front for a variety of reasons, right? I think on the continent, we're seeing indicators show that at least about 70% of startups that have been in market a year or less than 2 years might not make it out of COVID. And so that's a startling statistic, especially when you consider how important startups and SMEs are to the economy of the African continent. I think any economy, the world across. And so I think that's been an interesting one where, as a result of that, expected sort of reduction in deal flow, you're starting to see investors' valuations, are dropping. We've seen some numbers around 20 to 40% drop in valuations just over the last couple of weeks, from when, founders who were talking deals in 2019 to what they're now pricing them as a result of 2020, and just, pricing in some of that sentiment. We're seeing investors also significantly a lot more cautious in what they're putting their money into, right? And I think that's one of the differences across sort of impact investing and maybe more, VC-based investing, where in impact, right, you have a more patient capital approach to investing, where you understand the business, you're a bit more patient in returns, and you sort of put impact at the forefront of returns, whereas commercially, that's typically not the case. And so we're seeing an interesting, conflation around those two. And I think the second major theme we're seeing is around the shift in sort of user behavior and prioritization of spend, which I think is a really strong data point, right? And when you look at startups and the market in general, you need to be building businesses or products and bringing products to market that the consumer actually has spent to consume, right? And so as a result of COVID and people losing their jobs, you're seeing, the financial markets heavily impacted, and with underwriters, facing enormous exposure as a result of a lot of the expected defaults that are coming through. And so what's that starting to do is, limit what the consumer is willing to spend on. So in an era where you had, very large focus and sort of, you had the aways and different type of startups that weren't really solving intrinsic problems. What I'm somewhat excited to see is money now chasing, really important and critical problems. And same with consumers, right? Only wanting to spend their money on sort of core needs, right? Food, sustenance, water and sanitation, housing. So you're seeing a trend around that sort of space, and a lot of money and startups across sort of health tech and your fintechs, attracting a lot of capital versus your property and retail sort of brick and mortar models. And I'd say the third one, which I think is pretty, the world across, is this digitization boom, right? I think the fact that we're all sat here speaking on, Hangouts is indicative of I think, a future world, and hopefully one where, well, I'm still optimistic we will go back into real life and we all get to like shake hands and be human again. But I think you can't negate the rise of digital and, Zoom, your Netflix, and also just trends in terms of startups and what people are tagging these sort of low touch economies, right? Building products in tech that allows people to still engage and engage in commerce without actual contact. And so I'd say for me, those are the three key things we're seeing a lot of in Africa, and seems pretty aligned as well with the rest of the world.
Thank you for sharing. I'll definitely want to go back later on the seed stage founders particular scenario. It's very, if not alone, it's very interesting to understand how vulnerability is now treated as the center or key for sustainable development, and that we can only go as fast as the least privileged person in our economic system. So Felix, to count with your perspective also a little bit on this line, I mean, you manage several communities of startups. You deal with different stakeholders all the time, from investors to other service providers for startups. You have startups talking to you daily also about this. What in your ecosystem in particular, or in the other areas that, because I know that you have also representing partners in other in Europe, for example, are you witnessing particular very evident growth opportunities? What is the kind of innovation or the approach to innovation that you have been seeing as thriving and actually allowing startups to reinvent themselves and be agile in these times?
Yeah, thanks for the question. I think, in short, the capital is still there, it's available. And we do see startups raising under the pandemic still. And I think I would definitely suggest founders to reimagine how they should approach their business and also customers. Try to integrate with the domains that managed to survive under the pandemic, such as what we mentioned just now, the connectivity, Zoom, Netflix, and all these virtual entertainment is definitely something we spend most of our time and capital right now, no matter at home or outside. And at the same time, you do see industries such as e-commerce, entertainment, online educations, even fintech and contactless technologies are on the rise as well. So definitely try to find a way to leverage this. And if you manage to catch the news on a regular basis, you do see companies in these spectrums raising money. So try to integrate your companies around this area and survive from the storm. And I just want to build on top of our conversation just now, where the connectivity right now allow us to leverage the openness of relationship building with people across the board, like what we're doing right now. And imagine if we put up an event next week where I need to fly to Barcelona, or maybe I ask you to fly to Hong Kong. I think it won't be our first priority, but with the connectivity, and also now we get used to jumping on virtual events, we can unlock a lot of business opportunities right there. So instead of using this as an excuse, I would convert this as an opportunity to connect more people where you seldom make an introductions and build relationships. And at the same time, I think these kind of industry landscape right now allow people to connect people with less accessibility at the same time, and also people with less capital who are willing to travel in the past. So I think combine all these elements and add it on, it's definitely going into the values of impact and also sustainability, where we expect people spend more time and go on more virtual events instead of flying around on the flights. In short, we kind of reduce the carbon footprint. So why not? And also, I think secondly, it's definitely a good time to redefine the problem statement and also the customers you want to solve. And business change over time, market change over time. And we mentioned there's so many recessions like in the past couple of decades. So try to flip the downtime into an opportunity. I think is the key for future investment and attractions. And I think investors would definitely love to see founders who can survive under the storm and think creatively. Oh, I think
I
you're
was
muted.
mute. Sorry. Yeah, totally agree. What do you think could be, and as a growth hacker yourself, and for someone who has led startups to maybe shifting a little bit, but giving other sorts of resources that startups can do to scale that are not only related to direct funding or sourcing for funding. Those startups that are from the sectors that don't have as much as attention right now, that are not purely tech related or with large scale solutions that can grow internationally and a little bit also go in this wave of the technology and these kind of initiatives globally that are being set for startups. What do you have specific directions or things that these founders could explore that would allow them to maybe be sophisticate themselves and start to scale from where they are and where they stand right now?
Yeah, I consider technology and internet is actually a medium or tool to help companies scale faster and do things faster. So it doesn't matter whether you're coming from a technical background, whether you're running a technical company or not, there's always a way where you can leverage the digitalization to do more stuff and reach more people. So at the end, if you are running a non-technical business, you definitely need to pay more attention to an area where you can scale digitally. Regardless of whether you're running maybe a restaurant, traditional logistics business, there's always a way where you can leverage these resources. And founders and small, medium business with less resources, there's so many resources online where you can leverage, ask for help. I think ask for help is definitely one key thing right now. And people are really willing to help. And platforms such as Bridge for Billions are definitely in the right position to provide a platform to connect people across the border, offer advice, and people learning from each other. So it is a matter of whether you have the willingness to take the leap into technologies and digitalizations and go further. There's many startup programs out there where you can get these resources and access the right network. So I think access the right network is the second important key elements for any kind of business. Partnerships, mentors, investors, startup programs where you can get access easier and get high quality network pre-verified by organization itself. And secondly, I think that the good thing about joining programs or peer groups would allows you unlock more opportunities. So definitely do your research and find a group where you can support each other. And I think the one last thing I want to jump into is obviously right now in investment side, investors have different considerations when they invest and put money. Try to think from the non-capital investment, like resources, time, where you can exchange values, where you can eventually transfer knowledge into something where you can help one organization versus another. So I think this is definitely a good way where you can at least survive a short period of time and leverage the resources right now, and also the downtime at home and think creatively.
Great, thank you. I invite you all. Meanwhile, I have a few questions I would like to share, but in the meanwhile, I invite you to really share your questions. I want to know what you want to hear. What are your questions, and why did you log in today? What were the things that you would like to hear discussed? I do invite you to do that, and I will ask Lwazi, because you have very interesting perspective as a co-founder of Headquarters, or HQ, which, as I'm correct, aims to be Africa's first digital social capital market to support Pan-African female entrepreneurs. Could this be the key moment for founders who usually are forgotten, as we were talking a little bit before? And how can we make the investment scenario more inclusive? I would love to hear your insights and what you've been seeing lately.
Great, thank you very much for that. I think, like a lot of time in history, and I say this very sensitively because I think, we all can't lose sight of the fact that, if we have dialed into this environment, we are somewhat living in somewhat more of a privileged type of existence, right? And so I think there's a real need, there's real impact in a lot of people's lives where right now their priority is just staying alive and staying above board, let alone trying to build a tech startup. So I think I say that with the most sensitivity around that knowledge. I think also in the same vein, though, one of the things that I truly believe is that crisis is also opportunity, right? In the same way we're seeing a lot of startups, potentially go under, we're also going to see we're seeing a lot of new business models and a lot of new startups come to the front, right? And I think for me, one of the areas and that I'm most passionate about, and I do work in, is this idea of how do we move the needle in sort of venture capital towards women, and also women founders of color and women on the continent. I mean, when you look at some of the numbers in 2017 or 2018, a couple of $100 million in venture capital raised, in the US, and only about 2% of that went to women founders, and only about 0.02% of that went to women of color. And, that number gets even smaller when you lens it across the continent. And so I think for me, that was just a startling, statistic, and an area that I thought, definitely is a key area for women to be brought forward, and for women founders to find their space and to attract more capital. And so for me, what led me to that journey, and that what still continues that work, is that, a lot of people will often say, people are lazy in Africa, or they don't want to work, or all of these stereotypes and narratives that are often, imposed upon the continent. And I think some of that is very real. And as much as there are lazy people in the US, in the UK, and in Asia, there are certainly lazy people in Africa, I'm sure. But I think one of the things that came across for me is that obviously poverty actually is not an IQ issue, right? Which is often the narrative. It's actually an access issue. It's access to knowledge, it's access to capital, and it's access to markets. And so for me, based on that insight, was really what led me to come up with HQ, and hopefully we'll be growing that over time. But it was really about analyzing, how do you solve or build product, or build an ecosystem that solves for those three bottlenecks, which is access to knowledge, capital, and markets. And really that's where we've come to. And I think there's a really, strong opportunity today to bring women to the forefront. We are majority of the population. Statistically, businesses that are run by women are more fiscally responsible and have stronger ROIs, and yet we are the least funded, and we're the least supported. And so for me, that's a really important piece of work. But equally, I think at the same time, part of what we're telling founders now as well is, to, I think, Felix's point, and Joe, you really have to become creative, right? I think as a startup, and it's the nature of a startup, right? You have to exist to solve a real problem. You can't just be stuck in the paradigm of what you started, last year and hope this whole knowledge of, build the product and they will come. No, you have to really be applying a human-centered design approach, I think, more than ever, to what you're building and what you're bringing to market. And so I think for me, that is one area I definitely encourage founders, is to explore this notion of being a little bit more creative, right? Maybe I started with a business that sells handbags, but maybe I have a distribution, logistics, network. People need food, people need medicine. Can I pivot my company to now, bring mail from the post office to your house? Really thinking through creatively, how can I pivot my model? How can I rethink what I do to fit this current ecosystem and what the market needs? And then I'd say the third bit is really around this notion of stay alive, right? Become even more fiscally responsible. We are encouraging startups now to look at making sure they at least have a runway of anywhere from 12 to 18 months, or 18 months and beyond. When you speak to the CDC and others in this ecosystem, people are expecting at least for this to switch over in the next 18 to 24 months. And so we're encouraging startups to really, take very fine-tooth comb type of look into how they're spending their money. You know, what can you get rid of? What can you downsize on to really maximize and stretch out your revenue stream over this period, just because it is so unprecedented and the end is still unclear, right? Depending on vaccines and a whole bunch of things. So I think creativity, agility, and, you know, positivity, you know, stay positive, stay sane, try and keep a good attitude, and hopefully we all get out of this in good health.
Thank you, Lwazi. Joe, to pick up on this, I would love to hear from the investors' perspective if they have you witnessed that changes in the way they're relating to the startups that they are already making the investments in? Has the process changed? Has the investment readiness, self-awareness changed in this process?
I would say number one on that, we do see some of the changes in terms of fundraising. As in, we would see that, of course, just like what we have been discussing on different industry, like some of them have been grooming since what our lifestyle has been changing, like attack or even like a conference that we've spoken into. And the other way is that, like, some of them who is hanging there, who some of the industry need to be hanging there, like travel, like some of the restaurant, what they can really do. But in terms of fundraising, we are also seeing for those that is hanging there, investors are offering support onto bridge financing. What we are seeing, instead of doing like a full run for fundraising, they also have been offering some of the cash flow for them to be able to survive for a longer period, just to hang there. And of course, on the other hand, for those that have been booming, we are also we still keep in terms of on AngelHub or even some of the impact investing, we also see some of the traction that they want to, they see some of the growth over there. They want to hit into this spot and do an equity fundraising run. So it's really about like how they can support each other and hanging there. And yeah, that's mostly what we are also seeing and what investors are also willing to offering out at the moment.
That's great, and I'll take the moment to, because we're starting to receive some questions, Lwazi, also on this, but in your ecosystem and in your networks, we have Justin Chu who's asking about the specific trends on impact investment you are seeing in Africa right now. Could you, like, investment led has increasing in the past decade? What are the trends that you're witnessing?
Great, thank you for that question. I'd say there are a few trends, but I think two probably to highlight. So one, I think, which is a really exciting one in my opinion, is we're seeing an increased interest and influx in terms of impact investing dollars into the continent. I think we've always seen, a lot of sort of aid type investment, which is great. I think your DFIs and your grants and those kind of instruments have been really helpful to sustaining the continent. But I think for me, what's been encouraging is this trend of, strictly sort of impact investing, right? Money that comes in with the view that you can invest in startups, you can invest in ecosystem in a way that means capital and impact are not mutually exclusive. And so I think for me, that's been an interesting one. We're seeing, we've recently seen this notion of sort of blended finance structures as well, starting to take root, especially in South Africa, across different sectors. And really it's this notion of thinking about just creatively as an ecosystem, how do we solve for poverty and how do we solve for growing and sustainability? And, we're seeing really exciting financial instruments, which is the part of impact investing that I'm most interested in. I think there's an increase in the knowledge of people across impact investing. But I think what for me is even more exciting is we're seeing an even a rise in sort of innovative finance, which says we've taken the theory, we've taken the information, and now we're actually building instruments into the market that actually support interventions. For example, recently the Treasury Department in South Africa has partnered with, the University of Cape Town and another private sector player on almost a $30 million green outcomes fund. And it's structured in a way where you have a blend of patient and commercial return. And so I'm really excited to start to see that trend between private sector and public sector working together in a more transparent, but also more impactful way. We're seeing it across agri-tech, and I think, similar to the incredible work at IAX with the Women's Livelihood Impact Bond, that's a piece of work that, I've been working to pioneer and still working on the continent to say, can we build more transparent financial instruments that can start to solve for the liquidity issue for investments on the continent. So I think the financing piece is a really exciting one, and I'd encourage anyone who's looking for ways to engage in the ecosystem and invest in the continent to actually explore participating in one of those instruments. I think on the build and product side, I think we're seeing some really interesting trends as well from a tech and build point of view, where we're seeing the rise of sort of assistive tech as a sector. So this notion of saying, can you build IoT-based prosthetics and interventions that actually help people with disability, or addressing some kind of SDG, which I think is a really important intervention, right? And moving away from this notion that doing well is bad business, so it's only for the kind people, and you have to remain poor for doing so. And so we're seeing a rise in assistive tech. We're also seeing a lot of interesting trends around sort of finance, fintech for impact, which is this notion of, I think both Felix and Joe had touched on it earlier, around this low touch economy, or social or contactless engagement. And so when you look at how DFIs and different aid communities are trying to reach some of the most remote parts of the continent, leveraging fintech now is a really important way, building payment gateway infrastructures where money can be transferred from diaspora family member in Europe to someone in Africa. And so we're seeing a really interesting growth in that space. And also then the advent of sort of future tech, right? Your blockchains and tokenization models, where you're starting to decentralize wealth and get a larger piece of the continent involved, whereas before, investments and things were usually kept for the more wealthy part of the continent.
Yeah, I'm going to launch this question into more concrete tips or perspective for early stage founders, and I would like maybe all of you to add with your each insights. I've also seen this in the comments somewhere. So when it comes to seed stage founders and early stage founders, what are the advice you give to make a self-assessment of your investment profile, and the specific concrete tips on what investors are looking for and how to prepare to address investors for these founders, and how these concrete tips have they changed today or in what we're living? I don't know, Lwazi, if you want to go first because you were speaking, and then we can pass the word to either Felix or Joe if you would like to complement.
Great. Sure. Sorry. So the first part of that is specifically for seed stage startups, what they should focus on. Sorry, I missed the first part of the question.
Yes. How for you to self-assess your investment profile? What are the things you should focus when addressing investors?
Okay.
What are they looking for?
Okay. So in terms of seed stage, I'd say, things to focus on, raise as much free money as you possibly can. This is a rule. I think for me, these are rules I'm going to share that I think we preach, COVID or non-COVID, right? I think it's just strong business principle. Raise as much free money as you can. And especially in Africa, don't give away equity unless you have to, especially at the pre-seed or seed level. You're still at sort of, ideation, proof of concept, almost post MVP. You're still trying to prove what you do. You haven't really validated your solution at scale. And so I think a lot of the mistake founders do is they'll go and, raise VC or whatever type of funding make headlines and all sorts of things, which is so unnecessary, because by the time they reach any level of scale, they don't have any more cap table left. And so I think raise as much money as you possibly can for free. I'd say the second thing is network. Investing and raising capital is a relationships game. I think, if a lot of people are talking about this notion of over communicating now, whereas before that would have been a bad thing. I think now we're all home, we're all stuck like in our computers, get in touch with people, get onto LinkedIn, really, become your own growth marketer. It's nobody else's role. And I think also, take the time to learn and think about what you actually do. I think some founders are actually in good, and seed stage founders are in good position where maybe you've raised money and you have now some downtime and runway to some extent to sort of lay low and just kind of rethink about and staying alive. So I'd say, look at where your business is, look at what your needs are, and then create a strategy that solves for that. In terms of concrete tips for investors, you should know your business more than anybody else in the room, and you should know your industry as more than anyone else in the room. So I'd say it's become even more important now to have a pitch or a deck that really speaks to who you are, your defensibility, and why you're the person to invest in. But also, I think the founders that are most successful now are ones that have sort of COVID resilient scenario planning. So show your scenarios, show that you've thought about what market you're in and how you get out of it. And I think if you can leverage your network, try and stay alive and present yourself with a solution that has a market placement, I think, if anything, you have higher chances of staying afloat.
Great, thank you. Joe, would you like to comment, especially on this, the profile, how to understand the target of the type of investments you're looking for, how to align with how to look for the right investments for you and for your profile?
You mean from an investor point of view? How do they?
From a startup's point of view,
okay.
How can you be aware exactly what the kind of profile of investment you're looking for? And this may go for free money, as Lwazi was saying, to business angels, to crowd equity fund. I mean, with all the scope, how can you make sure you're going in the right direction and prepare for it?
Again, very agree on what Louise has said, on just to be like never okay, just to get more. But then one thing that I really want to add on to is like one of the key things during the meantime, being creative is also very important during this period of time. I can give you some of the examples, just like we have been talking to different startups recently. They do like I give you an example of like Hong Kong unicorn, Lala Move, which is a delivery service, and also Klook, which is a travel industry unicorn. What they really do is they previously standalone unicorn to do travel and delivery. But what they really do to be creative during this kind of moment is to offer like food delivery service that can help food industry and even restaurant during the lockdown as such, so that they can create a potential revenue to even for themselves as well, and helping the whole industry. I would say another example is that we're seeing some of the campaigns going on, just like say one of the startup that we relatively early stage, they originally helping restaurant or even other food withheld group just to save their unused food by selling them perfectly with a discount price. So that's an app that you can go on and just pass on it. Then you can see where can I buy cheaper unused food. But then apart from doing the normal infrastructure, with the lockdown, you may not able to go to restaurant as such. So how can myself as a user, if I run out of job, I have not much money left, where can I get like some of the discount food? what they're really doing is that instead of they create a campaign for like people sharing the food. Just by that, number one, they can create some of the traction for their apps, and number two, once this is all the COVID event gone, those users has already can convert into their partners onto their apps and startup. So more onto being creative of like the problem that you're seeing, and try to again like be resilient during this period of time.
Thank you so much for the examples, Joe. It's really insightful to see what others are really doing and how could we adapt to meet this kind of innovation and agility. Felix, would you like to add over this?
Yeah, sure. I think first of all, the definitions of seed funding is kind of different in the Bay Area versus anywhere across the world in Europe and Asia. And people jokingly say that the seed fund of this Bay Area is equal to the Series A in Europe and Asia combined. I would put in the directions of the first round investment. I think having a fundraising goal and is not enough. Make sure you build direct relationship with the investor you eventually want to work with. Make sure you find the right and relevant investors, study their portfolio companies, and see if you see any potential leverage where you can work with their portfolio companies as well, because it's also one of the considerations when an investors put money into a new startup. They see the potential of collaboration. They see the potential of future maybe acquisitions or some industry integration as well. So make sure you spend your time to study portfolio companies and find a similarity. You can find all these informations on platforms such as Crunchbase, MetaMark, PitchBook. You just need to spend some time and eventually find a way to see how you can maximize the impact. And I think impact is nice, ESG is nice, and do not forget the fundamental theory of investment, which is return. So make sure you have the numbers in place. You need to demonstrate how you can take your company from A to B. You need to demonstrate how you can expand your company into multiple geographic locations, or even initiate a new product lines even under the pandemic, or at least you need to have a plan to demonstrate what are you going to do when the situation slows down. So definitely find a way to prepare all these informations. And we do observe that there's new funds coming up, some independent investor or celebrity investor, they initiate impact investments as well. They initiate a fast track of investment where they validate startups who are trying to tackle the environments right now. So definitely leverage that. And I think the way investors and VC look at investment doesn't change much, because these processes are more or less regulated. So there's not much we can disrupt. And the way we see numbers, the way we see projections, and how we see scalability is slightly different, but at the same time, the numbers games is still there. Do not forget to focus on how you discover problems. Do not forget the importance of building your team. And given that many companies, they have they're downsizing the companies, and also companies are laying off, it's a good opportunity to find talent. People need jobs. So I mean, take them. I mean, a lot of great talents out there. Spend your time to build your rockstar team. I think that's really important. And I think one last thing is, again, given that the pandemic, a lot of promising startup programs, they're pivoting their programs from originally a physical accelerator program, incubation program, to completely online. So I mean, in the past, if there's any stupid reason where you cannot enter the state or other geographic locations, now you can apply to promising accelerator programs because they offer all these access, network, education completely online. So try, apply, and build your investment pipelines.
Super, super. I know that we have been past the hour, so I would like to add two questions. Maybe we can be brief from the participants. I already tried to add some more while we were talking, so maybe I'll go to you, Lwazi. Fernando asks us, what are the requirements which we need to have in order for them to help in showing that they have a positive impact in the world? So I imagine it has to do a lot with impact assessment and how to showcase impact and potential of impact to investors. Maybe if you could give some guidelines on how to prepare this.
Sure. If I want to make sure I understand the question properly, is this in terms of presenting their investment opportunities, so preparing the deck, or is this around how do they prove traction and how do they show returns, so like social return on investment and those kind of metrics? So I think you're on mute.
Sorry. I would ask for the clarification, but as far as I could understand, it has to be with being in showing to organizations, to startup providers, and to investors that they can promote impact and what's the best way to showcase the impact, impact management.
Yeah. No, for sure. I think it speaks to, I guess, traction. I think it's one, and this is going to be hard to answer because I unfortunately don't have a lot of context in terms of the sector. But obviously, depending on the sector and the product that they sell, traction and impact can be as a variety of different KPIs, right? So if you're in a space where you're about creating jobs, so an important metric would be to show and demonstrate, a relationship between your business and the interventions that you've built and what sort of outcomes have come out of that. So this could be number of jobs created, or number of homes fed, depending on the intervention. I think another thing which is a harder one on the impact side is now the industry has grown quite a bit on impact investing, where you have people like Acumen and Gin Network, and a lot of industry players have built good standardized ways of actually tracking impact. So metrics like using social return on impact on investment, really taking a data. I would say the primary thing is to really apply a data-driven or a data-focused way of proving intervention outcomes and proving impact. I recognize it's quite a very generic answer, but I apologize because I don't have a lot of the specifics. But I'd be happy to share my email and engage the person later.
Thank you for the comment. It was insightful. I can say to impact management and showcase, it's a whole area. Everyone is trying to know how to do it the best way, and there's a lot of literature about it. We are happy to also help. We also do it. I think that in terms of a startup, and if I got the question right too, make sure that your vision is always, and what you're doing is your solution is always aligned with the problem you want to tackle, that is meaningful enough, and that the way you innovate has to do with this problem, and always better ways of sustaining that impact, and that you're tracking that changes, what changes in the community, on those that use your solution, on those that interact and that are impacted, even if indirectly, with your solution, and being able to show that. And then if you want to know about investors, look for investors, as Felix, all the tips Felix was just saying before, but making sure that you are looking for investors who also have that purpose. They want to tackle solutions in the area you want to impact. And not to take much longer, I would just ask Felix or Joe. I don't know who you would like to share. We have someone in the audience who have asked about your opinions or your overview of the prospective capital inflows in the Southeast Asia region and the venture capital space. What would be the most thriving hubs or communities? This could probably be a long conversation when we can give an overview on how the scenario is looking.
Yeah, I think I can take that, and Joe can build on top. First of all, one beauty of the Southeast Asia and Asia Pacific region is within 5 hours flight across the Asia Pacific, we can basically travel everywhere. And secondly, within 3 hours time zone, we can also touch almost all the way from Mongolia, India, down to Australia and New Zealand. So it's pretty kind of a nice geographic setup for us, where the accessibility is out there. But given that right now we have less physical connections, but connectivity is still there. People are willing to jump on call, and we have less time zone, so we don't have to deal with this issue. Regarding the investment initiative, and also how VC placement, I do see in my past experience, venture capitalists in Southeast Asia, they usually stop at Series B or C. And when company needs to raise a later round, they either go for a Series C or private equity, or even expand the company to other geographic locations, or attract investors from Europe or the state as well. So I think speaking of the favorite sport, I don't have a strong opinion, because in Asia, we speak a lot of different languages, and we have so many different industries across the regions. The good thing is because the Asian community is super connected, so there's some industry definitely benefit from this geographic location, such as logistics, such as travel, such as fintech extractions, and which makes most of the unicorns that come from this space, like again, fintech, travel, and logistics. Although there's a lot of unicorns dominated the whole industry, but we do see a lot of new upcoming small startups trying to get a small market shares, and eventually manage to raise fund and growth. So again, we talk about lots of creativity in these conversations. In short, I would like to break down the creativity into how you leverage your mindset in understanding the market, borrow the trends, borrow the existing resources, and put into something where you can leverage your resources, maybe your team, your technology, your academic background, your business background, etc., and just combine all these things into a new business model, and something where you can help solve problems and people are willing to pay. And one last thing is, in Asia, we have, I think, we can name more than 1,000 investment bodies, more than 300 startup programs. So you can definitely leverage this network. And we talk about network, we talk about community, put yourself into certain communities and make sure you get involved and be super active. And eventually you can find a way to scale yourself as well as your company.
Yeah, thanks, Felix. To be honest, I don't have much to build on that, but maybe I can give you some example, even on top for what you have been just saying on to what are the things that we're also looking at during the period of time that we have seen, of course, more onto the supply chain issue that we have seen a vulnerability over there. People not getting food or supply chain that cannot be delivered over there. So therefore, we see some of the traction that coming up on top would be more onto what we think about, like sustainable alternative meat. We are seeing some of that also coming up, and we are seeing that like people who want to focus to online attack that we have gone about more onto like the helping others to get rid of the COVID-19, I would say, to wrap up a bit.
Yeah, thank you. I mean,
looks like you're on mute as well.
No, I'm clicking and nothing is happening. I'm sorry, everyone. I was saying that investment ecosystems are completely different from region to region. The level of sophistication is very different. There's a lot of information also online, and I do invite you to connect with both Joe, Jen, and Lwazi for your specific questions. I mean, I wouldn't like to take more time. We are way past the hour. I would like just to invite you if you would like to share any final notes.
Yeah, I can take it. One last item I want to mention, particularly related to the impact investment space. And in 2017, a venture capitalist, James Doquin from Obvious Ventures, introduced a new term called World Positive Term Sheet. So apart from the normal term sheet where like 2 pages, you show, legal terms, cap tables and participation preferences and all that, he introduced World Positive Term Sheets, particularly for encourage company, not just impact-oriented companies, but also other tech startups, to look at 4 major aspects as an attachment to the normal term sheet. And these 4 elements goes to the core values of your company and the problem you're committing and who is it for. Secondly, make sure to include diversity, equity, as well as inclusions, like the team, the dynamics, your customers, your team, and how you build up a diversified portfolio. And third, he also talked about the beauty of sustainability. So make sure you fall into this goal. And finally, he also mentions in the positive term sheet, which is bleaching and giving. I'm sure some of you might heard about the 1% bleachings before, where you allocate certain amounts of your profit and revenue and for good. I think the way he created these term sheets definitely encourage companies to jump into these directions, to make more impact, at the same time to review and do a self-assessment on whether your company is doing a good job in terms of sustainability and also impact. So have a look. I think it's pretty, there's a lot of articles on Medium and also as well as in his personal blogs from Obvious Venture. So good reference. I learned a lot from these methodology as well. And I usually recommend early stage startups, even though they are not in the process of creating term sheets or receiving term sheet from investors, but also put these 4 major elements into your considerations when your company move forward. I previously had experience in working at B corporations and also licensed and other B corporations. So I do have I do believe in the mindset of quantified impact into something where measurable, where you can give yourself a standard, where you can give yourself an achievement or goal and eventually do something real. So I think that's pretty much for me today, and really nice to have a conversation with other panelists. I would love to hear their notes as well.
Thank you, Felix. If you'd like to share in the chat, that would be
sure, I can put the link.
Thank you. Lwazi, would you? I would love to hear your notes.
I'd say for me, final notes are probably more on a human level. I think this is, again, an unprecedented time that I think we're all going through. Really, there is very limited blueprint on how we survive this, which I think is the opportunity and the exciting bit, right? I think it's a very rare time in history where, although we're all at different parts and points in the growth journey, but I think it's one of those really interesting times in the world where we're all almost learning at the same time, right? The world has almost stopped at a standstill to some extent. And I think it offers a really interesting time to introspect, to self-develop, learn a new skill, start a new hobby. Self-care, I think for me would be my final point, just because I think the rest of it is important. But if you don't stay positive, you don't keep sane, you don't keep yourself taken care of, everything else is definitely mute. So thank you for having me. This has been really interesting and exciting.
Thank you, all of you, for the generosity. So, Joe, would you like to share a note, a final comment?
Yeah, we say a short one. We have a lot of resources. We see collective schemes all over the places. You can find lists. We can also share with you, like list of the VC that who is also investing, list of the talent that has recently got out of job that is available to join some of your teams. Yeah, we definitely would love to share more support on there, and we also would love to have your give out as well to us, like just telling us what kind of need that you help, so that we can collab and make it to survive the whole situation together.
Thank you. That's why I wanted all of you to join today. I think we are all organizations that try to bridge these gaps within the ecosystem and support startups and give in what we have, and really believe in the power of community. So thank you, our amazing guest speakers, for joining. Thank you for the generosity and all the truth that you shared. We really, really appreciate. We have shared on the chat all the contacts. Do look and subscribe for all the events and initiatives from both AngelHub's Hong Kong community and Founders Factor Africa. They're doing amazing jobs. I've also left Bridge for Billions subscription page if you want to know more about future events like this. I want to thank you all for joining. I'm open to all feedback and other questions that you may have. I believe Ati also shared my email. And as Lwazi was saying just in the beginning, and that's the note I actually had here, we are living a truly tragic moment, but the only way to come out of here for sure is learning with each other and working with each other. And I know that the startups know better probably than anyone what it is to co-create and share dreams and resilience together. So thank you for joining today, and I hope you have a wonderful rest of the day.
Great. Thank you so much, everyone. Cheers.
Great. Thank you. Bye-bye.